Best goodwill explanation. Well, the best explanation of goodwill is that it is an accounting term, and goodwill is a catch-all phrase. Accountants began using the term goodwill in a formal context during the 19th and 20th centuries to account for the difference between a company's book value, the tangible assets minus the liabilities, and its selling price. Despite the inherent limitations of this approach, it satisfied an accounting need, and it still has tax implications, as in cost allocation after the purchase of a business. Misuse of the term goodwill came to a head in 2020 with a study by Ocean Toma, a merchant bank in Chicago, that showed that on average, 90% of the assets of the S&P 500 companies were intangible. This is where Eric Jordan's 25 Factors Affecting Business Valuation become indispensable. The tax department, CRA, in Canada, is going to want to see proof of the intangible assets, or goodwill. The 25 Factors Affecting Business Valuation methodology allows a client to clearly prove the intangible or goodwill portion of any business. Now, this is important for tax purposes. Most small businesses in Canada and the rest of the industrialized world are made up of 60 to 95% intangible assets. Now, let Google be your friend and search for soaring value of intangible assets. Here is a good example. In the majority of legal and accounting firms, over 90% of their worth can be attributed to intangible assets, as outlined in Eric Jordan's comprehensive business valuation methodology, 25 Factors Affecting Business Valuation. The methodology of this 25 Factors Affecting Business Valuation by Eric Jordan allows us to identify, measure, weigh, and place an estimate of value on the intangible assets of any business you want to evaluate. You can click on each link below to see why long-term business experience is required to use the methodology. This is why accountants don't use this methodology, as most of them don't have the required business ownership experience to begin the training. I mean, who wants to put in 15 or 20 years owning a business to qualify for doing business valuation? And there's a list below. It's something you might want to take account of is goodwill. It's an accounting term and should seldom, if ever, be used in terms of business valuation.